Welcome to this week's Cattle Call Grain broadcast from the Nebraska Soybean Board Studio, which is brought to you by the Nebraska soybean farmers and their checkoff here in Lincoln. A lot of things to look at. Kind of nice to have a Wednesday update within the just markets in general, but we're going to take a look at what's going on. You know, we've had this discussion before about absenteeism. Are we starting to continue to see a pickup? And is there concerns we're going to see history repeat itself? Add to that what's going on with inflation, what's happening with box beef, a cattle on feed report out on Friday. And are people going to start scaling back? Are we going to see more eating at home, which means more grocery purchases, which means are we going to see a mass buy of meat once again? Lots to look at today as we bring Brad Kooima into the conversation. He's with Kooima and Varlick out of Sioux Center, Iowa. So I think we got to start there. Absenteeism, is it going to be a repeat of what we've seen the last 2 years?
I don't think it's going to be as bad as it was initially. There are some areas of the country, you know, it's funny as an analyst, what you pay attention to. The old days, we'd be worrying about, you know, boring things such as overall numbers, average weights, box beef values, stuff that like made some sense, right? Like weather maybe. Now we're trying to figure out how long this COVID thing is going to last. And I am a little encouraged. There are some areas that it seems like, you know, where it was real hot here 2-3 weeks ago, it is starting to calm down. So, you know, I guess I would like to be a glass half full type guy and hope that maybe that won't last so long and we'll get these guys back to work. The slaughter level since New Year has been disappointing without a doubt. You know, the last 2 weeks of the year, Susan, you expect the lighter slaughter because of the holiday, right? Christmas and New Year's. But I think the industry was kind of geared up to really run at that slaughter hard to refill all the pipeline, right? Demand is still very, very good. Don't let anybody kid you. But then instead, then we fell on our face with this absenteeism. So different people have different guesses, but I'd say, you know, conservatively, we probably underkilled maybe by 75,000 or so so far this year. So it's, you remember back in the worst of it in 2020, we were maybe 600,000-700,000
Right.
backed up. So, you know, I feel like if we can just get back to normal soon, I'm hoping that, you know, we can finish this week with slaughter more in the 120 to 22 range. And I think if we could do that for a week, everybody'd feel a lot better about it.
Are we going to see? There's been a lot of chatter, especially on social media, of wondering if we're going to continue to see that rush to the grocery stores to make those purchases of meat as this variant continues to kick everybody down, and folks say, "I'm done. I'm not going out to eat. I'm just going to cook at home."
Correct. And then on yes, that was a well said. And I would say even to tack onto that a little bit, you have that fear of running out, right? That implied shortage when you you know, you don't want to have that empty shelf thing. And you know, I've heard from multiple places, you know, that, well, we've got more demand than we've got product, which is kind of a big deal. You know, so you balance that. The average weights are big because the weather's good. We're not killing enough. Okay, sounds like Brad's bearish. All right. Now you've got a deal where you've got such excellent demand, Susan, that boxes are going higher. You've got a commercial, a packer, I believe, that obviously has been looking at, you know, through a microscope here after these last actions where you had the boxes go straight up and then they bought the cattle cheaper. Very unpopular, obviously. You know, would they dare to do that again? I doubt it, you know. So, you know, that it feels to me like that's our market right now. So does that mean we're stuck here? Maybe, you know, for a minute. I could see that the market could stay between 135 and 140, say, for maybe 4 to 6 weeks. And then after that, I think we take it higher. And that's, of course, making the assumption that we get back to normal. We get back to where we can kill full blast. And the whole, you know, the dynamic you talked about with the eating at home is interesting. That's actually kind of a big deal. You know, this is a little out of my area of expertise, but they tell me that may have changed by 8 or 10%, that balance of HR trade, hotel restaurant trade versus retail trade. We really raised the bar on that retail trade to the point where people found out that, you know what, I can cook a steak. It's pretty good. In fact, it might be even better than what I get in some restaurants.
Yeah.
And I can do it twice a week for the same money as going out once, right? You know, so now that's been one positive thing that came out of this mess. So
yeah, that's a positive. People learned how to cook again. Are we going to see any follow through going on with this trade? I mean, it was nice, like you said, to see grains and livestock both have an upside type of day.
Yeah, well, you always you try to look smart, right? That's
Yo.
some days it's really hard work for me anyway. I told you off air that what am I going to do when I got a big up day, and I'm not really sure why, because I was surprised as anyone today. Frankly, cash news was underwhelming to say the least. 137 yesterday, a little bit of it this morning. Frankly, it was harder to get 137 today than it was yesterday, and yet we had this really nice up day. We did come off our highs a ways at the end of the day. I guess I'm going to go with my last statement. I think we're range bound. I'd love to have this thing come ripping out of here and have all kinds of follow through. I guess I'm going to say I don't think so. Fed cattle rallied up high enough to fill a gap that we'd left. We hit 50% retracement, went a little bit further, and then we kind of edged back off. So unless there's some big surprise in the cash, which frankly I don't see, unfortunately, I would say maybe the market retrenches back a little bit here in the short term.
Well, finally, as we wrap up, a cattle on feed report will come out on Friday. Any early thoughts on the trade?
Good. I'm glad you remembered that. I almost forgot. Well, it's dry in the south. That's why wheat's sharply higher, right? So there is no wheat pasture. So last month we saw big placements because it was light cattle that should have gone on to, or would have normally gone on to wheat pasture. Instead, they're going to a feedlot, so they're getting counted. That doesn't mean there's any more cattle. It's just that they're getting counted in a feedlot thing. And I think in December it was even bigger than it was in November. I'm told that there's huge placements in the south of cattle that they would have liked to graze out of wheat. So what does that mean? In my view, it maybe pulls some of those cattle forward because they're going to grow faster in the feed area than they are in the pasture. They might have been October cattle. Now they're probably August cattle, give or take. Okay. So, as I look at, if I look at the line out there, August cattle to me, just because of a supply bulge, would probably look as high as anything up there, frankly.
All right. Lots of things we've looked at. Brad, thanks for joining us this week.
Welcome.
That has been this week's Cattle Call. And as always, folks, commodity futures and options do involve a substantial risk of loss. They're not suitable for all investors. And that is the Cattle Call here on the Rural Radio Network.